Hi everybody, Dave Sullivan here with Mortgage One, and I have a special guest.
John Leach, branch manager of Mortgage One Lakeside office.
John is our 203K specialist, and John, a lot of people don't even know what a 203K loan is. Can you tell them a little bit about what that is?
Sure. A 203K loan, in short, is a rehabilitation loan that's insured by HUD that allows borrowers to roll in repair costs into their mortgage rather than purchasing a home and having to come up with all that money out of their own pocket after closing to do repairs to a property.
Okay, so with the way the housing market is right now, there's a lot of people overbidding for homes that are very nice. This might be an opportunity for people to get into a home that might need repair and not have to come up with the cash after closing.
Correct, yeah. With lower inventory levels right now, some of the houses that are on the market aren't in the best condition for some buyers. So we're finding that a lot of homes that are available, as I said, are a little run down or a little outdated. So this is a terrific product that allows them to, replace a roof or put new windows in or put all new carpeting in.
Okay.
Pretty simple, basic renovation and repair items. They can get into other repairs that are a lot more in-depth or costly.
Sure. So it's not really for the addition per se, but it's more for the renovation of the current structure. Is that accurate?
Partially accurate,
Okay.
Dave. There's two types of 203K loans. There's what's called the 203K limited program,
Okay.
which is one for just basic repairs and renovations to a property, kind of like we were just talking about. Putting a new roof on or putting new windows in, new flooring, maybe a new furnace or something. HUD also has a full 203K program, which involves a HUD consultant. And in that program, they can put additions onto a property. They can add a garage to a house if there's not one existing. They can do a lot more structural work to the property. Whereas with the limited program, you can't really do anything structure-wise to the home.
Are they both equally, are they harder to get than a regular mortgage? I mean, what's the difference between a regular mortgage and a 203K mortgage?
Sure. They're both FHA insured loans, so we follow the same guidelines when it comes to underwriting the file. So really, other than a little extra legwork from a standpoint of getting your bid secured, do a little more paperwork with contractors, they follow the same exact rules and guidelines as FHA. So, in regards to down payment money, let's say, what we do is we take the sales price of the property plus the cost of all the repairs you want to do, add those together, multiply that by 3.5%, and that's what your down payment amount is.
So it's really on the final loan.
Correct. Yeah, it's on the final, what we call acquisition price, which is sales price and repairs.
Gotcha. Now, from a credit perspective or an income perspective, is there any difference there or no?
No. Again, it's exactly like a normal FHA loan or even conventional loan from that standpoint. Generally, we like to see credit scores at least 620 or higher. There is no income limits to the program. There is, obviously, depending on your income and the amount of debt you have will determine how much of a mortgage you qualify for.
Sure.
Which kind of leads me to one other point is that's the best place to start first. Find out exactly how much of a mortgage you qualify for and work backwards.
Yeah, that's so true. You hear people go out and they shop for homes.
Right.
They should really be shopping the mortgage first and then.
Correct, yeah. And especially for the 203K program, because if you know your loan amount is maxed at $150,000 and you're looking at houses that are $140,000, that only gives you about a $10,000 leeway for repairs. Whereas if you're at $150,000 and find a house for, let's say, $120,000 or $100,000 or whatever, you have a lot more room for repairs and renovations to the property.
Yeah, the other question, last question really is, people, are they allowed to do their own repair, or do you need a licensed contractor, and does that contractor need to be approved?
Yes, great question actually, and it's one that is kind of a sticky point, or has been a sticky point. When it comes to doing the repair work, all repairs have to be completed by licensed and insured contractors. Whether you are personally a contractor that's purchasing the home as a personal residence, they still require that all repairs are done by licensed insured contractors. They will not allow anybody to do any work to the property themselves. And basically it's to make sure that somebody doesn't get too far into a project or get in over their head, and then they're not able to finish it and meet the specs on what they started the project as far as all the repair work they want to do to the home.
How much time is allowed for the repair work?
You get up to 6 months for HUD. Generally with the limited programs, those are generally repairs that are going to be done within 60 days.
Sure.
With the full program, if you start getting into structure repairs, then you might take up that 5 or 6 month period. But generally, the time frame from beginning to completion of the loan is about 45 days.
Okay.
Just because of the additional paperwork due to the contractor bid requirements, etc.
Sure.
But it really doesn't. If you're dealing with a loan officer that knows what the program is about and how it works, and sets the right expectations, you're really not adding that much extra time to the process. Maybe about an extra 2 weeks or so.
Not bad at all.
No.
John, how can people reach out to you if they want to touch base with you on the program, on 203K programs, or really any type of a mortgage?
Sure. Again, as David said, I kind of specialize in 203Ks, but have the ability to do, any mortgage at all. But the best way to reach me is to text me or call my cell phone directly at 586-924-9102. Or you can also email me directly at jleach, Leach, at Mortgage One, spelled out ONE, jleach at mortgage1.com.
Great. Thanks so much.
Thanks, David. Thank you.